This is the Type B Trading, non-aggressive day trading, pattern day trading vlog for July 5th, 2018, Thursday. I hope everyone had a good 4th, and we're going to go ahead and get started. And the market is preoccupied again with the only game in town. Micron has almost 3 million shares worth of volume in the pre-market day today alone, and so I'm sure we're going to be watching it. GM kind of crept into this gapper, but it is a little news driven, but GM's not your typical banner day trading stock. It's highly institutional. I will keep an eye on it. We'll see if it makes patterns, but unless something else happens, it looks like Micron is the only thing that the market cares about right now. I'm hoping that the news has settled down and everything is obviously not baked in. We're baking it in. This is how it goes. But I hesitate to say, well, the worst has happened, but hopefully it has. We'll find out. We'll take what the market will give us. We'll be back to talk about it later. All right, so we've gone ahead and stopped trading. As you can see on the profit loss, as far as money goes, this was not a winner. This was a loser. All told, about $340 down. As far as the metric that really matters, because losing is part of day trading, the metric that really matters is, did you stick to your plan? And that also was bad. And you could say it contributed to this loss, although you can stick to plan and still lose. I had 4 trades, 3 were losers, and gonna kind of go into the problems with each. And of course, the one winner wasn't for a whole lot. So let me get this out of the way, and we will take a look at first Altaba. So this morning, Altaba wasn't even on my list, but I do, obviously I have other scanners than just the opening scanner. I have a relative volume that I use, and Altaba kind of, although it's not there now, Altaba had popped up. A lot of these stocks I wouldn't trade just because of, there's various reasons that I don't trade them. So, unlike the pre-market gappers, of which, a lot of them I will choose to look at, with these I'm way more selective. But Altaba's one I've traded before, and it had the volume this morning to, look at a trade. So with Altaba, what happened was, and again, I had 4 trades, and 3 of them I did not follow plan, and they were all the losers. So with Altaba, what you had was, you had a stock, I'm going the wrong way with this, you had a stock that at the open dropped severely, and then immediately came up and started making a very fast but still very visible opening bear banner. And I love these because it allows you to get in, and typically you're going to ride a good downtrend. And clearly that would have been the case here. So why wasn't I in this? And the reason is, I had looked at the stock. Market was already open when it was on my relative volume scanner. Brought it up, saw what it was making, and oh wow, that is a classic opening bear banner, and it was at 1, 2, 3. So, I went ahead and sold short. I mean, that's a strategy. Then I looked a little closer. We gapped up in the pre-market. So I had done back testing a while ago, more than a year ago, on this opening bear banner while I was kind of developing the strategy. And the back testing showed me that, in stocks that gap up, usually these don't really go your way. Stocks that gap down, you're kind of capitalizing on that sentiment, and it usually is a gateway into a downtrend. So once I saw this was an up gapper, which I should have looked at before I entered the trade, then okay, I'm not in strategy now. So now I'm just going to, let it, I'm in, so it'll stop me out, it stops me out. So my stop loss would have been, was right where it stops being a banner, which would be if we make a higher high. So my stop loss was the end of this tag line. And as you can see on this bar, on this candlestick, we got almost there. And that's when I pulled the trigger and got out. We didn't cross my stop loss. And if I had stayed, luck would have been going my way. And just looking at the various inflection points here and knowing how I would have bought to cover out of that, I would have had a $500, $600 trade in this. So, okay, but I wasn't in pattern. And also, when you put your stop loss and say this is your stop loss, you're saying I will accept this loss because the potential to gain is higher. This was half of my range, roughly. So this is an acceptable stop loss. All right, then set it. Don't trigger it before it hits. And again, the difference is minuscule, just a tiny little bit, just a cent, but it never hit it. So I should have stayed in. Once I was in, I should never have been in the first place. All right, so that one's gone. Altaba's volume went away, and we never came back to it. Okay, so let's go to General Motors. So General Motors, at the open, had plenty of volume. It was news driven and started making this really nice descending wedge. And so we waited for 1, 2, and then 3. We didn't get our third confirmation point here. We got it down here. We waited for our 3 points of confirmation, and we went ahead and bought long. We sold to cover on the first bump up, and then it came down. We went long again back at our line once it tested it, and we went and kind of came down, almost hit my stop loss, and then back up. And once we went back up, we started buying out in stages in these 2 candlesticks here once the momentum seemed to have topped out. We did get a little further bump if we'd held in, but the volume when just it was just trading sideways, so no worries. Anyway, made a little bit of money there. Went on to Micron. So Micron, made 2 trades in Micron. With Micron, I missed this pretty cool little ascending channel. And I missed it for all the right reasons. Here is come down here. It starts down here. So there's a down point, there's an up point, there's a down point, there's an up point. So I've got my line drawn. And now what I need to see is it come down, hit this resistance line, or this support line, go back up, fail at the resistance line, and then that's where I'd buy in. So what happened instead was we did not get another challenge of the support line. Came back up, we were at the resistance line, but this was not my 3. So I did not short. Had I shorted, boom, okay, whatever, but that's not pattern. So I actually am not going into this, I stuck to plan. Now, drop down, and as I say, usually, very often when these drop, they'll consolidate into another pattern before potentially continuing the drop. So this starts forming a symmetrical triangle, and I had my one, and then came down, and this actually was 2. This was a very fast forming triangle. This one made 3, and so I shorted in. I expected I would get a bump about a drop about this size. It did drop, and it turned around and came up. Now here's where I went wrong. Once it dropped, even though it didn't go far, it's out of pattern. This is my drop. Should have liquidated everything as it came back up. Instead, I held on, came up. Okay, it dropped again. Well, I'm out of pattern completely now, but I stayed in. My original stop loss would have been back up here, where it's no longer a symmetrical triangle. And once it hit it, boom, I got out. Should have been out down here. At the least, should have been out somewhere in here when it's not in pattern. When it's not in pattern, you get out. So while this wasn't, and none of these losses were terrible, But this one was worse than it should have been if I had followed pattern. Then the last trade, I have this, what looks like, what I'm looking at and seeing a bear triangle forming. And it's a very big one. But here's the thing. Patterns exist on every time scale. And that means that you can have a very big triangle. And it works just the same. And if you go down and look at it, it's made up of all kinds of smaller patterns going the way you expect them to go. And the whole adds up to a big bear triangle. So this is kind of a longer term pattern. Now, we're coming up on noon. And I expect, even though this is micron, which has got crazy volume going on, I'm expecting that to start to peter off. But I know before it peters off and the pattern goes away, if this is a bear triangle, I should be able to get one more really nice drop down. Here's the problem. The problem is when I drew the line, I only had 1 point on the top. And I had these 2 points on the bottom. And we were coming up. So okay, I said I'm gonna wait until I get confirmation, and then, or I'm gonna wait until I get another up point, and it comes down, and then I get another up point, which may have taken me after 12. But if I could have gotten that third point of confirmation, I'd have entered this trade. Well, okay, that's perfectly fine. The problem is we start having trouble making a high here, and it lines up perfectly to the point where if you go back to this little shelf and you draw your line, now, wait a minute, what if this was our first point? Come down, go back up, and then down. What if this was our first point? Now we have 1, 2, and as this fails, we have 3. Wow, I can enter the trade, and I get a much bigger, okay, this is, you can call this FOMO, the fear of missing out. I usually like to call something like this trying to make the market be what I want it to be, instead of reading the market for what it is. Now, what I clearly needed was a third challenge of this line down here. Otherwise, this can be what you call a double bottom, which is a pattern that it exists. We don't trade it as part of our patterns. It's more of a longer term trading pattern. Certainly exists in 1 minute scale though. And until we get that third point, you don't know. This could just be a reversal to the upside. So by making this in my mind be what I needed it to be for what I wanted to do to work, I was trying to bend the market to my will. Well, the market has other ideas. So I went short, and rather than getting my nice down bump, the price kind of keeps going. So I'm moving this line now, and I realize, okay, this shelf probably isn't going to work. So I back it back down, and I'm just kind of drifting the line. My stop loss is right here. As if it goes over this tag line, then I know we're going to be over our original point, and then it's no longer a triangle. And I basically let it get right there, and I was out. Well, never should have been in. If it had gone down, if it had made these nice, beautiful points like a triangle should, then I could have had all the confidence in the world to enter that short. But this did not conform to plan. I entered into it anyway, and I took a deserved loss. So, and that was it. After that, it's noon or close to it, and clearly my mind is not right for this today because I'm not following our plans. If I'd followed our plans, I would have stayed out of this trade, and I would have stayed out of the first trade. I would have made a little bit on GM, and I would have lost a little bit on this trade, but it would have been a much smaller amount. Or I could have gained if I had at least dropped some shares here. So anyway, if I'd followed plan, today would have been a near zero day. And given the state of the market, that's what you'd expect if you'd followed plan. I didn't follow plan, so today was not a near zero day. However, tomorrow's another day. It's Friday, same week. I'm expecting the same kind of stock issue as far as no trading, no volume. So right now I'm of the mind that unless I see just a beautiful, beautiful pattern, I might just not trade it all tomorrow. I will be here watching the market though. So I will give a vlog, and we'll go at it again tomorrow. Next week can't come soon enough. See you all later.